Good morning. We will pay attention to accrued expenses today. It sometimes happens at the end of the financial year that certain expenses that incurred during that period was not paid in time. If the business does not take this full amount into account in their financial statements, it will give a false impression of the financial result when they determine what is the profit or loss of the business. So if the total expense is not taken into account, it means that the profit will show a higher amount in the profit and loss as it should have been. And therefore you have to adjust your expense account with the amount that you still have to pay so that you can have the total amount in your expense account and create a liability at the end of the financial year for the amount that must still be paid. This total expense will be disclosed in the income statement. So you will take the expense according to the ledger account, so that's all the amounts that you paid during the year, plus any accrued expenses, amounts that must still be paid at the end of the year because it forms part of the expense for the current year, less expenses that is prepaid for the following year because those expenses, although they are on your ledger account, does not form part of the expenses for the current year. The entries that will be completed is to debit, for instance, interest on loan or water and lights that must still be paid, the telephone account that must be paid, etc. Because you debit this interest on loan account, you increase your expenses, and if you increase your expense, the owner's equity will decrease. You will credit the accrued expense account to create a liability so that the liabilities will increase and that you can show this liability as a current liability in your balance sheet at the end of the year. This is a temporary liability that is created on the last day of the year so that you can record the correct entries in your financial statement. On the first day of the next financial year, you have to complete a reverse entry for this original entry that you've completed. So the reverse entry will be the opposite of what you've just done. We debited the interest on loan account, so now we will credit interest on loan. Accrued expense was credited, then we will debit accrued expense. The following information is available from Leroy Traders. On 30 June 2015 is the end of the financial year. A loan from ABSA had a balance of 56,000 Rand. During the year, a payment of 4,000 had been made on the loan. Interest is paid on the total 8,000 and it's at 15% per annum. Okay, first of all, we have to determine what was our opening balance because the closing balance on 30 June is 56,000. During the year, we made a payment of 4,000, so it means at the beginning of the year, we owed 60,000. The date that this repayment was made was on the 30th of September. So from 1 July 2014, the first day of the financial year, until 30 June 2014, the day that the payment was made, the business owed 60,000 Rand for July, August, September, 3 months at 15%. So the interest for the first 3 months is 2,250. From the 1st of October, after the repayment was made until the last day of the financial year, 30 June, the business owed 56,000 Rand for 9 months and they will pay interest at 15%. So that gives you 6,300, and if we add up, we see that the total amount for interest that should appear in your income statement as the expense for the current year is 8,550. If we look at the amount that was already paid according to the ledger was 8,000. The total amount that you have to pay is 8,550 minus the 8,000. So that means that there's still 550 Rand outstanding at the end of the year. When we complete the entries in the general journal, we will have to show that the expense for interest on loan must increase on the debit side with 550, so that the total amount for the year is recorded in this interest account. You will create a liability and you will credit the liability with 550. The total amount that we have to pay for interest for the loan is 8,550, so we will transfer that total amount to your profit and loss account. On the first day of the next financial year, you have to do a reverse entry. So we debited interest to get the full amount in the interest account, and now we will credit the interest on loan account. We created a liability so that we can have the right information in the balance sheet. Now we will debit the liability and show the accrued expense as 550. In the loan account, we have a balance of 60,000. On the 30th of September, we made a payment of 4,000. So our outstanding balance at the end of the year is 56,000. In the interest on loan account, they told us that the balance is 8,000. We calculated that the total amount that must go to the profit and loss account must be 8,550. So that means there must be an additional amount in the interest on loan account of 550, and you must credit the accrued expense account with the 550 Rand. Then a correct figure will be taken to the profit and loss account, because you've got a total in your interest on loan account now of 8,550. And to the balance sheet, you will take 550 as a liability. On the first day of the next financial year, I want to close off this accrued expense account, because this liability was only created to correct my books at the end of the year. So if I want to close accrued expense, I must debit the accrued expense account and credit interest on loan with 550. At the end of the year, we calculated the 550, the balancing between what we paid and we were supposed to pay, and on the first day of the next financial year, we bring down that balance. What did we learn? When an expense was not paid in time at the end of the financial year, an entry must be completed for this accrued expense. So the expense account will be debited and the liability accrued expense will be credited. This total expense, after you completed the adjustment for the amount that must still be paid, will be transferred to the profit and loss account. The accrued expense, the outstanding amount, must be disclosed in the balance sheet as a current liability, because it's amount that the business still have to pay at the end of the year for the current financial year.